5 enterprise software stocks to buy. Greetings everyone, welcome to our channel. Enterprise software stocks are gaining from a strong digital transformation environment. Major breakthroughs in cloud computing, predictive analysis, AI virtual assistants, robotics, and IoT have set a stage for solid growth in the enterprise software industry. The enterprise software sector is headed for a tough couple of quarters, with companies reining in spending as we suffer through a deep recession triggered by the coronavirus pandemic. But there are places where investors can wait out the storm. Enterprise software stocks look poised for big gains in 2020, and these 5 could lead the pack higher. If you're new to our channel, you're going to want to head on over and hit that subscribe button. If you're ready to have your mind blown, ring that notification bell as well, so you'll never miss another video. Undeniably, the growth of the Internet of Things, or IoT, is the primary driver of the industry's success. According to the International Data Corporation, or IDC, the estimated compound annual growth rate, or CAGR, of IoT spending to be over 11% in the next 4 years. Notably, it cites software as the fastest growing technology category with a CAGR of 13.5% in the same time frame. The prominence of software in the world today is very apparent. In light of this, sharp-eyed investors are keeping a close watch on the best software stocks to buy. Without further ado, let's dive in. Salesforce. Salesforce, a provider of cloud-based customer relationship management software, is a SaaS pioneer. The company went public in 2004 and has since grown its annual revenue to around $17 billion. Salesforce isn't nearly as profitable as Microsoft or Adobe, partly because it spends close to half of its revenue on sales and marketing to drive growth. But that hasn't stopped the stock from soaring. Shares of Salesforce have surged around 700% over the past decade as the SaaS model became an industry standard. Like any enterprise software company, Salesforce revenue will be affected by business failures during the pandemic-driven recession. But Salesforce is a good option if you're looking for a profitable, pure-play SaaS investment. Salesforce is trading lower recently, and much of this is because of SAP's disappointing earnings report. Bearish analysts believe this is a key indicator of enterprise software spending heading downward. Still, the company reported strong results for its second fiscal quarter for 2021, with a 29% revenue increase of $5.15 billion. Its third fiscal quarter revenue was $5.25 billion, which gave its confidence to forecast $20.7 billion to $20.8 billion in revenue for the year, a 22% year-over-year increase. Palo Alto Networks. Since Nikesh Arora took over as CEO in 2018, Palo Alto Networks has raced to strengthen its cybersecurity products to meet the challenges of today's IT infrastructures. The company has done well. For its last fiscal year ended July, Palo Alto Networks delivered a 27.5% year-over-year increase in revenue to $2.9 billion. Its stock rose to a 52-week high of $251.11 on February 19, before the coronavirus pandemic sent stocks to a bear market. Despite decelerating growth, the company possesses many strengths. Its financial health is solid, allowing it to execute acquisitions. Palo Alto got its start in 2005 selling an enterprise firewall product that intelligently screened for malicious network traffic. It was more sophisticated than what was possible from the basic firewalls of the time, during an era when most employees work from a business location. This approach has served Palo Alto Networks well. For the second quarter of fiscal 2020, it generated $342.6 million from its subscription offerings, compared with the $246.5 million from its firewall products. The company earned an additional $227.6 million by offering support services. In total, Palo Alto took in $816.7 million in Q2 revenue, up 15% from the second quarter of 2019. The company also benefits from playing in a large market. Cybersecurity is a crucial component from any business connected online. That's why, according to Gartner Research, the cybersecurity industry will be worth $188.8 billion in constant currency by 2023. The Salesforce Einstein artificial intelligence software integrates with MuleSoft to create opportunities for customers to optimize their businesses via Customer 360. Salesforce is targeting at least $26 billion in fiscal 2023 revenue. Servicenow. Servicenow is a California-based software company Its key cloud computing platform is called the Now platform. The Now platform functions to help companies manage digital workflows to enterprise operations. It does so by providing companies with the means to digitize and automate departmental and cross-enterprise workflows. Essentially, this allows Servicenow customers to optimize their business processes on a single cloud-based platform. Furthermore, its customers consist of almost 80% of the Fortune 500. Servicenow develops and sells software designed to help automate information technology department functions such as help desks and operations management. Enterprises are adopting Servicenow as their central workflow platform, a trend that will help the company grow revenue in the mid-20% range in coming years. The company is bullish on the operating leverage, especially its 25% earnings before interest and taxes margins, projecting 31% annual free cash flow growth through 2023, and the company's total addressable market will be worth $151 billion by 2024. KeyBank has an overweight rating and $620 price target for Now stock. HubSpot. HubSpot investors should be prepared for billings growth to slow in the next several quarters as HubSpot laps difficult 2018 comparisons. However, nothing has changed about the bullish long-term outlook for the stock. HubSpot should continue to gain market share in the $17 billion small and medium-sized business customer relationship management market. HubSpot has unparalleled marketing, sales, and service offerings, 1,500 digital ad partners, and a strong base of 65,000 installed customers. Bank of America has a buy rating and a $215 price target for Hub's stock. HubSpot software may not be well known to be an average investor, but it's playing a critical role for small businesses, especially during the pandemic. HubSpot inbound marketing software helps companies manage their current customers' relationships while also providing online tools to acquire new ones. With HubSpot focusing on small and medium-sized businesses, you might assume that the company has taken a hit this year, as many small businesses have suffered from the negative economic effects of COVID-19. But HubSpot has proved to be very resilient, and in the third quarter, HubSpot sales spiked 32% and adjusted diluted earnings per share reached $0.28, both of which outspaced the company's own guidance and beat Wall Street's expectations. Even during this tough economic time, HubSpot grew its subscription revenue by 32% in the third quarter and boosted its total customers by an impressive 39% year over year. Even with a difficult economic situation, HubSpot's management said full-year 2020 revenue will be 28% higher than it was last year. Investors have taken notice of HubSpot's phenomenal growth this year and have pushed the company's share price up an impressive 122% year-to-date. Microsoft Corporation. Microsoft has created a conglomerate of platforms that work together to create an unmatched digital ecosystem for its customers. Despite its nearly $1 trillion market cap, Microsoft has the potential to maintain double-digit revenue growth for at least another 5 years by investing in homegrown projects like Azure, in gaming and external deals such as LinkedIn and GitHub. Microsoft is now well-positioned to capitalize on major tech growth trends in employee and customer engagement, communications and connectivity, and business analytics. Bank of America has a buy rating and $162 price target for MSFD stock. Microsoft has been around for 45 years, dominating the era of traditional software. Microsoft Windows became the standard operating system for PCs, and Microsoft Office was the productivity suite of choice. Microsoft's dominance was tested by the proliferation of mobile devices not running Windows, and by competition by Alphabet's Google in the form of Google Docs. Microsoft eventually abandoned its Windows-centric strategy by bringing first-rate versions of its Office applications to mobile devices, and it launched Office 365, a subscription version of Office. Office 365 has been a success, garnering around 40 million customer subscribers and cementing Microsoft's lead in the productivity software market. Other SaaS products from Microsoft include Teams and company's collaboration software, which is quickly gaining subscribers during the pandemic. Microsoft isn't a pure-play SaaS company, and the stock is historically expensive, but the company has been able to successfully transition to the SaaS era while maintaining its market dominance. Bottom line, server and software stocks have been some of the hottest performers in the market in recent years. Businesses big and small rely on one or both companies to organize customer lists, unify omnichannel sales and marketing efforts, and integrate back-end operations with customer-facing business units. So these are the 5 enterprise software stocks that you can buy. What are your thoughts about it? Let us know in the comment section below. Don't forget to like this video and subscribe to our channel. Also hit the bell icon button so that you'll get a notification whenever we post a new video.